Decoding reasons behind Adani's FPO volte-face, budget reactions from top voices, and car sales see a sharp jump in January on the back of continuing robust demand. This is Business Plus, your definitive edge to business and economy. Gautam Adani could never have seen this coming. A month ago, his companies were riding a crest. But post-Hindenburg, his fortunes have nosedived, and there seems to be no end to the free fall of Adani Group stocks. The Adani Group chairman delivered a public message after he scrapped the much-publicized secondary share sale of Adani Enterprises. Listen in.
Considering the volatility of the market seen yesterday, our board strongly felt that it would not have been morally correct to proceed with the FPO.
The development comes a day after Adani Group company successfully closed India's largest ever FPO, backed by strong institutional support, albeit weak retail participation. Chairman of Adani Group, Gautam Adani, said that the decision was taken to protect investors from potential losses, adding that its board felt it would not be morally correct to proceed with the FPO at this juncture. Shares of Adani Enterprises, remember, fell almost 27% today. At the day's low, Adani Enterprises stock was 54% below the upper band of its FPO. The stock has been on a free fall since short seller Hindenburg accused the conglomerate of, and I quote, brazen stock manipulation and accounting fraud, unquote, wiping out 54% of investors' wealth in just 9 days. The rout was seen in other Adani Group stocks as well. Just today, 5 of its 9 listed companies logged in the lower circuit. Now, in the last 3 years, Adani Group stocks have appreciated almost 800%. Adani Enterprises alone has staged a 1400% rally. Hindenburg argues that the fundamentals of these companies do not support such hefty valuations. Many of Adani Group companies do not generate consistent cash flows. The concerns around leverage and promoter pledge remain high. Adani, however, has brushed off these allegations, saying that the fundamentals of the company are strong, balance sheet is healthy, and assets are robust. Adding to the conglomerate's woes is Credit Suisse, which has now stopped accepting bonds of Adani's companies as collateral for margin loans to its private banking clients. The Swiss lender's private banking arm has assigned a zero lending value for notes sold by Adani Ports, Adani Green Energy, and Adani Electricity Mumbai. Joining us in the newsroom is R. Sridharan. I want to first begin by asking you, Shri, is there a precedent of an FPO being withdrawn after a full subscription before this?
Well, there's absolutely no precedent like this, Shweta. In my memory, there has never been a case where a company has managed to get a full subscription either for an IPO or for an FPO, and then the next day has decided to return the money to investors. So this is totally unheard of. It's never happened before. What happens usually in the market is if you are an IPO applicant and you haven't got the allotment, then the money gets returned to you. But it's never happened that a company would raise the full money and then go on to say that we want to give it back to the investors.
Okay. So the Adani Enterprises shares, remember, currently are 54% below the FPO price. How do you read into the moral high ground that Mr. Gautam Adani is publicly taking?
So Mr. Adani is not wrong in saying that he needs to protect the investor. Frankly, I'm surprised that the FPO even went through after the Adani Enterprises stock started falling. Because normally what would happen is, in such a situation, let's say the stock falls 25%, what would happen is the company would do two things. One, either it would cancel the FPO, or second, give a steep discount to the potential investors. In this case, neither happened. They first went and got the money and then went back to the investors saying that we don't want to go ahead because, like Mr. Adani put it, he wants to protect the investor interest and he doesn't want them to incur any further losses, which also probably indicates that he doesn't think that the worst is over in terms of the attack that's happening on the group.
Shri, what's next for Adani Hindenburg saga? Will it end up in litigation? And if so, what really lies ahead for retail investors?
Well, Shweta, the point is the Adani Group has already lost more than $100 billion in market cap in the last just 1 week. So I don't think any kind of litigation is going to make good those losses, and there's anything to be gained for the Adani Group or Mr. Adani personally by getting into a litigation with the Hindenburg Research Group. What I think might be more constructive from the Adani Group point of view is to address the perception or the actual issues that may exist, which have been highlighted in the Hindenburg Research report, and then start putting systems in place which gives investors greater comfort. So I don't think there's going to be any significant litigation, or even if there's a litigation, anything significant is going to come out of it which benefits the Adani Group. I think Mr. Adani would want to, first of all, tide over this difficult situation, and then start looking at what does he need to do to bring the investor confidence back into the Adani Group stocks, which have taken a severe beating over the last 1 week ever since the report came out.
Well, Shri, appreciate you joining us with all those details. We will be keeping a close eye on the Adani Group saga. But shifting focus for now, 24 hours after the Indian government came out with their last full budget before elections, remember, global brokerages have begun to weigh in on what they feel are the good and not so good things about the budget. Goldman Sachs feels that the budget ticks all the essential macro-prudential boxes. It says that India held to the path of fiscal consolidation by targeting a reduction in fiscal deficit, also hailing, in fact, the increased capex spending that was announced in the budget. And Moody's too seems to be liking it on the face of it, with reservations about some debt parameters. According to them, the narrow deficit forecast in the budget is welcome amid high inflation and challenging global environment. And they are, of course, upbeat. Moody's, they're upbeat on the budget 2023. Japanese financial brokerage Nomura also views the numbers, but with some caution. They said that their analysis pointed towards a DM, or a double-dip recession, one that occurs when an economy sees two periods of contraction separated by a brief period of expansion. And Jefferies didn't seem too upbeat, particularly by the capex numbers presented by the Indian government in the budget. They said that the budget reiterated the key tenets of the government, but things can change pretty quickly and during the course of the year. And moving on, car makers got off to a great start in 2023, with many of them posting a double-digit rise in sales in January. And that despite an ongoing global supply chain issue. Maruti, Tata Motors, M&M and Hyundai reported growth in sales, while MG Motor and Honda saw a decline in their sales volume, while the two-wheeler industry did not find as many takers in general. The country's largest car maker, Maruti Suzuki, reported cumulative sales of over 170,000 units, witnessing a year-on-year growth of nearly 12%. However, exports saw a marginal decline of 3% in January. Maruti's subcompact car segment, which includes Alto, Baleno, Swift, Dzire and others, cumulatively witnessed a 10% growth. Close rival Tata Motors, on the other hand, sold more than 48,000 passenger vehicles in January, witnessing 18% growth compared to the same month last year. The company's domestic sale went up by 18%, while the export grew 83% at over 300 units. However, Tata Motors' commercial vehicle sales were down by 7%. In comparison, rival Mahindra sold just over 33,000 passenger vehicles in January of 2023, witnessing a 65% growth. Sales of utility vehicles, SUV and MPVs were up by 66%, while the sale of cars and vans, including electric vehicles, stood at a 125 units, which is a growth of 8%. In January 2023, Mahindra's total exports stood at 3,000 units, witnessing a 5% growth as compared to January 2022. Car makers that saw a dip in sales includes Honda Cars India, which registered monthly domestic sales of around 7,800 units, registering a year-on-year decline of 25%. The company's vehicle exports were also down by 17%. British automotive giant MG Motor also reported a 4% drop year-on-year in vehicle sales in India at around 4,000 units. And shifting focus to two-wheeler market now, the two-wheeler market suffered in general. Hero MotoCorp total dispatches to dealerships fell by more than 6% to 3.5 lakh units in January, with weak domestic sales and exports. Motorcycle sales fell by 7%, while scooter sales rose by 2%. Bajaj Auto's dispatches to dealership were also down by over 20% as compared to the same month last year. The company did report a 4% rise in domestic sales. However, it saw an export drop of almost 46%. Reports suggest that car demand is likely to remain skewed towards sports utility vehicles, also known as SUVs, and premium variants in the coming months, while two-wheelers demand may weaken further in months to come. And that's all we have in this edition of Business Plus. For more incisive news analysis and cutting-edge documentaries, keep streaming News 9 Plus. Thanks for watching.